Welcome to stockmarketfunding.com. And basically, we're in part 2 or part 3 of Google. This is the Google expiration date. We have calls that expire in 4/17, a day after the earnings. Well, they expire on Saturday, so the 16th will be the close. So basically, a day after the earnings, I've highlighted this $600 call that expires. C for call. It expires on Friday at the closing bell. And I'm going to move the rest of it so you can see it in the tape. So I'm going to slide this over. And the open interest right now, the open interest on that $600 call, that's right here, $600 417 call, is 23,000 contracts are open for the 15th of the earnings report on Google. So it means that the implied volatility there, as far as I call it, is that the majority of the crowd believes that Google is going to come out with a robust quarter and that these options expire the next day and that the strike price is $600 right here. So when I showed where Google was trading at right here at 566, they report earnings this coming Thursday on the 15th. People believe that we're going to be well above $600, and the cost of the contract, the low was $2.50, and the high of that contract on Friday was $3.40. So people believe that they're buying this expiration, where I showed that we were doing this May contract, $500 put in part 1, and a $630 up and out of the money call right here, 522. And only the thing that we like about this trade is there's only 119 open interest on the 630 call, but it's a May contract, and too many people getting on that side of 2100. Well, we're buying the 500 is 1,580 contracts. I'm sorry. So that's the $500 put that we're purchasing as well. 1,580 contracts. The $630 call also has 1,535 open interest. So $500 put for May that we're buying, and we're also buying the $630 up and out of the money call for May. And both open interest is about equal. The expiration for Friday's $600 call is $23,000 or 23,000 contracts that people believe that Google is going to make the bigger pop. And there's probably a lot of options, institutional involvement in that 23,000 contracts. So SMF Pro traders are doing a $500 put that I showed in part 1 on Google. And we are also, and that's the May contract right here. Okay. You can see it right here. And here, Google, that's the ID, the $500 call. Okay. Down here, Google, $630 call. What this means over here is that the open interest is the amount of contracts that are traded for May at both strike prices, and the SMF Pro traders taking that side of the market and this side of the market. And a lot of people are thinking that the $570 call, 7,400 open interest. You've got on the put side, and these are all going to expire this week, 3,100. So you've got more people right here between 570 call and 570 put. You can see that people are to the upside on Google versus the downside risk. You can also see that we are going to, you can see that the $620 call has got 2,100 contracts traded, okay? But we could take our traders and put them in 20 contracts. Why buy 10 of the 620? Yeah, it's $10 lower than the 630 strike here, but we can put 20 contracts here to the upside, up and out of the money 630 call, and we could put 10 of the put option, $500 put option right here to protect that money.